Hello, everybody, and welcome to the Magenta Edge Digital Workshop Series. I am George Achimpong, founder and managing partner of CapitalWise. This is the eighth and final workshop of a 2-month series where every single Thursday we brought to you a different workshop covering a variety of different facets in small business. And today we are super excited to bring to you the blueprint to building business credit. To see all the articles, stories on Magenta Edge, or watch the replays, visit tmobile.com/Magenta Edge. T-Mobile for Business will be live tweeting throughout today's workshop, so feel free to join the conversation by clicking the Twitter icon on your screen on the dashboard. And finally, there will be a live Q&A at the end of the presentation, so feel free to ask questions along the way so that we can answer them at the end of today's workshop. All right, so as I mentioned, today's workshop is the blueprint to building business credit, and we are super excited to cover this topic for you today. All right, as I mentioned, I am George Achimpong. I am a thought leader in the area of finance and entrepreneurship, and I have a decade of experience in this space. I'm the founder of CapitalWise LLC, which is a boutique financial advisory firm serving first-generation millionaires. I'm also the founder of Melanin Money and Pocket Advisor, which is a financial social network, and the host of the Uncensored podcast. So let's talk a little bit about the role that business credit has played in my business, right? So business credit has played a role when it comes to investing in systems. So before you hire your first employee, team member, contractor, systems are your first employee, right? Being able to send out emails in an automated fashion, being able to keep in contact with your customers in an efficient way, systems are a vital part in growing your business. So business credit helped me tap into those systems. Also, scaling advertising. It's often said that a hit song isn't made, it's marketed, right? And so having the financial resources to amplify your message and get in front of more people can be incredible, and that's what I've done. And then, of course, purchasing inventory, right? If you have a brand that has a physical products, as you know, inventory is essential to being able to make money. If you don't have inventory, you don't have anything to sell. So having that business credit can be a great resource to be able to fuel your business. And in this presentation, I'm going to tell you a story about how not having access to business credit, or more importantly, not leveraging, cost me $1.5 million. All right, so let's cover today's agenda really quick so you guys can know what we're going to cover today. All right, business credit defined. What is business credit? Why can it be beneficial for your business? What type of business credit is right for you? How to establish business credit, establishing business credit from start to finish. Bank and credit institutions, you got to speak the language, and also understanding how to leverage traction to get access to the resources that you need. All right, so what is business credit? Business credit is the ability for a company to obtain borrowed money that can be used to purchase products or services, which is based on the trust that payment will be made in the future, right? So essentially, a credit or lending institution is saying, hey, we believe that you're going to pay us back, so we don't mind lending you this money in the interim. All right, let's talk about how it can be useful. Cash flow, right? You might have an invoice that you're expecting to be paid from a client or a customer, but that invoice might not be getting paid for 15, 20, 30, 45 days, right? But the reality is you have bills every day, right? Or a lot more frequently than when that invoice is going to hit your bank account. So having access to business credit can help you navigate your business, take care of payroll, or just have the resources you need to stay afloat while you're waiting for those payments to come in to your business bank account. Expenses, right? So whether it's a large expense or a small expense, being able to leverage business credit to help, again, mitigate cash flow constraints or things of that nature can help you to grow your business. Because if you have to use only the cash that you have in your account at that time, especially if that cash is coming in periodically, it might put a strain on your ability to grow. So having access to business credit can be immeasurably helpful in that scenario. And of course, as I mentioned, marketing and advertising, right? So let me tell you a quick little story. So I have an e-commerce brand called Melanin Money. Maybe you've seen an ad on your timeline already. And essentially, we sell physical products and merchandise And when I first launched the brand a couple of years ago, I just tried to get my brand out there through word of mouth. And there's nothing wrong with that. That's a grassroots way to do it. It's very cost efficient. But eventually, after a couple of years, I was like, you know what? I really want to get my brand in front of more people. So I leveraged business credit to be able to spend money on paid advertising. The same way many of you probably saw the advertisement to even come to this workshop, right? Using that medium to get in front of more people. And what I realized is I didn't need new products to sell. I just needed to get in front of more people. And so when I did the rough math on one particular product that we sell, based upon the inception of our brand, if I would have been paid advertising at the beginning, I would have made an additional $1.5 million over the course of the previous 24 months from selling that product. And it was the same product. So that just told me that I didn't need to do anything different besides getting in front of more people, right? It goes back to what I said a few seconds ago about a hit song not being made, it's marketed, right? So if you have a good product or service, the goal is to get in front of as many people as possible, and business credit can be a tool to help you do that. All right, so let's talk briefly about 4 main types of business credit. Okay, one, you have installment loans. Commercial installment accounts are business loans where you borrow a fixed amount of money that you repay on a fixed payment and period, right? So essentially, this is like a business loan, right? So you go to a bank or a lender, they give you a loan for, let's just call it $10,000. You have a predetermined time period to pay it back, a fixed payment amount, and probably a fixed interest rate, right? That's a pretty standard way to access business credit. Then you have a revolving account, right? And this is where you have a line of credit. So that way, maybe you get a $10,000 line of credit, you use 5, you pay it down, you use 7, you pay it down, and it kind of gives you access to use it on an ongoing basis. Whereas with the installment account, it's fixed. Once you get that fixed dollar amount, you're just repaying back what you originally borrowed, and you can't tap back into that specific credit source again. Then you have charge cards, right? So a charge card effectively works very similar to a credit card. The difference is that you are typically having to pay that off completely at the end of the credit cycle, right? So within 30 days, you're probably going to have to pay that balance off in full. And your question might be, well, if I have to pay it off in full in 30 days, is it going to be really beneficial? Absolutely, right? Just imagine you waiting on an invoice or a payment that's coming in 15 days or 20 days, but you have a bill today, right? You can leverage that charge card to take care of that bill or that expense that you have right now, and then ultimately be able to know that within 30 days, you'll have the financial resources to pay out that charge card. So charge cards absolutely can be a beneficial option as well. And of course, you have vendor credit, right? So let's say you have like an inventory-based business or there's suppliers that you need to work with. Having vendor credit is great because you're having to buy from these folks anyway. And that's when they're going to extend the credit so you can get the goods in hand, but potentially not have to pay for them for 30 days, 60 days, or whatever the term is that vendor is willing to set for you, right? And that can be huge if you have an inventory-based business, right? It goes back to cash flow. I can get the goods in hand now, start selling the goods, and as that money comes in, I can repay that vendor credit, right? Using business credit is a bet on yourself of the belief you have in your own credibility, right? So when we look at the word credibility, right, the root word of credibility is credit, right? And so essentially, when you're going to these lenders, they want to know that you have credibility. Because if you have credibility, you have what? With the person, you have good rapport. They trust you. They trust you. They're going to be willing to lend money to you, right? So let's talk a little bit about what is your business credit score, right? And just like your personal credit score, your business credit score is a measure of your credit worthiness, right? Because the business doesn't know you from Adam. So what they're going to do is they're going to look at your credit score to determine if you're the type of business that they want to lend resources to, right? So why do you need one, right? When lenders are deciding whether they want to lend money or not, they have to know that you are someone that is credible, right? How do you find it? You can find it by creating an account on on nav.com, and ultimately you can view your Dun & Bradstreet number, Equifax, and Experian business credit reports, right? All in one place by creating an account on nav.com. And then how is it calculated? Payment history, age of credit history, right? Also, the industry risk and the company size. Those are some of the variables that they're going to use to calculate your business credit score. Now let's move into lesson 2, how to establish business credit. Okay. What is the process for establishing business credit? I'm sure that's probably what most people want to know today, right? It's like, how can I actually establish business credit for myself, right? So let's think about what you want to do when you're starting the process for establishing business credit. Okay. First thing you want to do is you want to register your business, right? If you want to get business credit, you have to have a legitimate business. Now, I know that seems like pretty straightforward, but at the end of the day, I want to make sure that no stone is left unturned. So let's make sure that if we have a desire to acquire business credit, that we've done the first preliminary step of registering our business. Okay. Then you're going to want to request an EIN. And that effectively is like your business social security card, right? It's like how the government can identify that this is your business, and you want to be able to have that ID because anytime you apply for anything, they're always going to want to know that EIN number, right? And then open up a business banking account, right? So if you want to make sure that you have a clear separation of your business financials, then naturally you want to make sure that you have an account where those business funds are being held. That's also going to make it incredibly easier to get a pulse on your business versus if your funds were commingled with your personal account, right? You want to get a dedicated phone line, right? Because at the end of the day, again, you're presenting yourself to these lenders who don't know you. And if they're calling your personal cell phone number, right, to them, even though you might do great business over your cell phone, your personal number, they want to know and feel that you are an established business, right? And if I were you, I would grab a T-Mobile phone because their service is impeccable. I got one recently and I'm super satisfied with the service, right? So get a dedicated phone line. And then, of course, apply for your DUNS number, right? You can go to Dun & Bradstreet. It's completely free to apply for that DUNS number. So that is where things will begin to report on your behalf. Now, what does it look like to grow your business credit? Okay. Open trade lines with your suppliers. Okay. So you want to make sure that if you have suppliers, that you're opening trade lines with those suppliers. Get a business credit card or line of credit, right? Because once you get that business line of credit, now you're going to be able to use it, pay it down, use it, pay it down, and that is going to create history, which is going to show your credit worthiness. All right. Borrow from lenders who report to business credit bureaus. It's very important because you might assume that just because you're using your business card, that they're reporting to the bureau. So make sure that you ask the right questions when borrowing money and when selecting lenders to make sure that they're going to report to those bureaus. Okay. Now, what does it look like to maintain your business credit? Because the last thing you want to do is build up this business credit only to mess it up. Okay. So keep business information current with the bureaus. That's anything from address changes to telephone number changes to changes in ownership structure. Anything that's related to your business that's reported, make sure that you keep that information current and accurate. Pay all your bills and loans on time, right? And that's standard across the board from personal finance or business finance, right? If you want to make sure that you maintain healthy business credit, simply pay your bills and loans on time, okay? All right, lesson 3, banks and credit institutions, all right? Money is the language of business. In order to succeed, you have to speak it fluently, okay? So think about traveling to another country. If you couldn't speak the language, it'd be pretty hard to get anything done, right? So it's very important to speak the language of business, all right? So one of the ways is when you're applying for loans, apply for loans that favor your business, right? So for example, if there's a loan or a grant that's specific to a Black-owned physical products brand, right? Then do research on that. And if you're a Black-owned physical products brand, obviously that's going to put you ahead of the curve with being eligible for that loan. Okay. Conversely, if you are not a Black-owned physical products brand and you apply for a loan that's uniquely catering to those people, then there's a strong chance that you're not going to get that loan, right? So just do your due diligence on the criteria before you apply for that particular business credit, grant, or funding. Okay. Results. Believe it or not, sometimes having results in your business can be all you need to get access to capital, right? Now, arguably the terms, could or could not be comparable or favorable to what you might experience in a traditional lending sense. But sometimes you can find some pretty favorable rates. So imagine you have an e-commerce store that's hosted on Shopify platform, or imagine that you use PayPal as a payment processor. If you are constantly processing transactions, you have credibility with that platform. Like, oh, right, this business has done X amount of dollars in revenue consistently. I would be willing to let them borrow money because they have a track record of making money. And I can validate that because it literally came through our platform. So never negate the possibility of being able to get business credit from the platforms that you use from a payment processing perspective. Okay, so now let's talk about from the concept or the idea of business credit to actually achieving it and what it looks like. All right, so first is the what. Knowing exactly what business credit is the first step to understanding how you can use it to grow your business. Okay, the how. Knowing how to establish credit using a step-by-step process, which we are fortunately able to cover today from a fundamental perspective. And where. Knowing where to get business credit once you have established the foundation of credit worthiness, which we also had the opportunity to cover today. All right, let's do a quick recap. So today we were able to cover business credit defined. What is business credit? Why it can be beneficial to your business? What type of business credit is right for you? How to establish business credit, establishing business credit from start to finish, and then banks and credit institutions, speaking the language of business and leveraging your existing traction to secure funding. Your business is the vehicle, and credit can be the fuel you need to fuel your journey of entrepreneurship. And now we will hop into the questions that you guys have for today. Thank you so much for tuning in to our workshop. Okay. So our first question is from Charmaine Johnson. If you are rebuilding your personal credit, does having a secured credit card help in getting business credit? Okay, that's a great question. So generally speaking, your personal credit usually can be a springboard to establishing business credit, right? Because when you start a business from ground zero, right, then at the end of the day, you don't have any credibility yet. So what are they going to do? They're going to use you as the owner of the business to be able to leverage that credibility. So if you don't have great personal business credit, then naturally doing things like getting a secure credit card is going to be helpful. You can also do that same thing in business, right? Once you open up your business bank account and get that secured credit card with your bank for your business credit account, you can also establish it that way as well, because secured means that it's collateralized by resources that you've provided. So that is a great question. All right. Our next question is by Janelle Washington. Hopefully I said your name right. Do you need to have or be a personal guarantor to get a revolving account? I think that is a great piggyback off of the question that I just answered, right? When you start out initially, unless you're a really large business with established financials, it's going to be pretty hard to just get a revolving account out the gate. Now, the good thing is there are resources out there like Cabbage and Lending Tree where you can go ahead and make an attempt to see will you qualify without it, right? So that way you're not having to play the guessing game, right? And that way you can know what options are available to you. But generally speaking, when you first start out, they're going to want some level of credibility that's typically going to be tied to you personally, right? But if you take those steps that we mentioned earlier in the presentation, that's going to increase your odds in being able to secure that. All right. Our next question is from Felicia Joy. George, good to see you here. I am one of your customers. Oh, thank you so much. What methods do you suggest for calculating risk before using credit, which will have to be paid back whether the business revenues increase or not, like when you advertise? That's a great question, right? And one of the things I also often say is that you want to use business credit as a bridge and not a band-aid, right? A bridge, not a band-aid. So one of the things that I do when I calculate risk is I'm looking at, can I predetermine, right, the revenues that I'm expecting, right? Can I predetermine the revenues that I'm expecting? And as a business owner, most of everything that you're looking at, you should be looking at it from an ROI perspective. So you mentioned advertising in particular, right? So if I have tested a small budget, that's the first thing I would do is before I tap into using business credit at large, I would test it. I tested a budget at $5 a day to validate that I was going to get the believed ROI that I thought. Once I validated that, then I felt confident saying, okay, well, if I can get a 3-to-1 return on my investment, then that means I will have healthy enough margins to be able to leverage this credit, get the capital back, pay off the credit, and still maintain a profit. So some of the things you're just going to want to do is look at your business margins, right? Then determine how much you intend to spend on ads and make sure that there's enough wiggle room and enough buffer from your projections. However, at the end of the day, nothing is guaranteed, right? So you want to be very thoughtful about how much you spend and maybe use a test budget, right, that you could pay off in cash if it didn't necessarily go your way. Hopefully that's helpful. All right. Our next question is from Charles King. Just like creative financing, is there such a thing as creative funding? Yeah, there is a such thing as creative funding, right? And there's many ways that you can look at it. One thing that we didn't talk about in the presentation today is that you might have seen a lot of people do like equity crowd funds, right? And so now more than ever, because of legislation that was passed during the Obama administration, you could actually, if you're willing to give away equity of your company, you could actually post your company on sites like Start Engine, right? Or Public, I believe is what it's called. And everyday people can invest in your company, right? Now, typically what you see in the public markets is when people go out and buy stocks, all right, stocks and bonds, that's what they're doing. But it takes a lot to be a publicly traded company. However, an everyday company, a small business, has the opportunity to leverage things like crowdfunding to get everyday people who are bought into your brand or your brand idea and being able to use that to invest in your business, and ultimately that can help you grow. Okay. How will you know if a lender reports to the credit bureaus? Great question. I would just ask, right? I would ask. And you could probably do that either with a quick Google search, or if you're actually able to get on the phone, especially if you go through a source like Lending Tree. Once you get to the point where you're actually getting potentially approved for certain loans or lines of credit, you're gonna have to get on the phone with somebody to finalize the application in a lot of situations. And you can just simply ask, do they report? That's a great question. All right. Caroline Smith, if you are just getting your business account but still do not have your website or business email, would you suggest until the latter are completed? Yes, I would, right? I would definitely suggest that you wait to get those things up. Now, keep in mind, it doesn't have to be this perfect in-state version of what you want, right? Prime example, I have a financial social network. In order to get approved on Apple, I had to have a website. I just created a landing page, right? So at minimum, you want to have some digital real estate, right? Because remember, these people do not know you, right? So they Google you and they say, oh, they have a website. Oh, that website has a number. Oh, they have a location. Even if it's just like leveraging virtual office, right? Now you look like a well-established business, which is going to increase the odds of you getting that funding. So I would absolutely suggest waiting. However, I would not suggest waiting until you have this perfect in-state version in your mind. Just create something that's good enough to get you started that looks credible. All right. Hopefully I do not butcher this. Adil Hussein, I've invested a lot of my own money. I feel you. I have too. But I don't have results to show yet. I need access to business credit. How can I increase my chances of getting business credit? That is a great question. Okay. And so, like you said, you've invested a lot of your own money and you don't quite have results yet. One thing that I also wouldn't negate, and typically sometimes you see this like when people are creating fintech startups or things of that nature. Um, don't negate the people in your ecosystem, right? Someone asked about creative financing earlier. If you believe in your business, right, you have a compelling story. I believe, right, that other people will also believe in that mission. So don't forget that. Also, don't forget to tap into government programs like the SBA, right? They often have programs and grants and different funding that they might be able to extend your way, even if you don't necessarily have the results yet as it relates to revenue. So I would give those resources a try. Do you recommend using an international lender? That's a great question. I personally don't have experience with using an international lender. Um, I would thoroughly vet it out though, because if they're international, right, like there might be different rules as it relates to that financing. So I would just be very careful and do your due diligence. But I personally have not leveraged an international vendor or lender. Ruben Watson, which is better, a line of credit or a loan based on rates? Great question. So we covered both of those today. My personal favorite is a line of credit. And the reason why is because a line of credit gives you a little more flexibility, right? Because you might predetermine how much money you think you need to use, but those changes could evolve. You might need to tap into money again. With the line of credit, as long as you keep it active and are making payments on time, you can tap into that pretty much indefinitely, right? Unless there's some type of activity where the lender changes the terms because of maybe something that you've done. But as long as you've kept it in good standing, you can tap into that. Now, a fixed loan might make sense if you just want to control, you kind of don't trust yourself. Maybe it's like, hey, I just want to know that I have this fixed payment amount for this particular loan, and that's it, right? Maybe it might be an even favorable rate in comparison to the line of credit, depending. But my personal favorite is the line of credit because it gives you more flexibility. Kimi Omotade, hopefully I didn't butcher that. How long does it typically take to build business credit? That is a great question, and I hate to give you the answer, but it varies, right? So a lot of that is going to vary based upon the speed at which you implement some of those steps, right? And also some of the things that you decide to take advantage of up front. So, for example, if you take advantage of vendor credit up front, if you take advantage of charge cards up front, if you take advantage of more things early on and establish yourself as quickly as possible, and you're willing to leverage your personal credibility to accelerate that, it can happen faster. But if you're not willing to leverage your personal credibility, it might be a slightly slower roll. But either way, as long as you get started, it won't take you too long to establish some form of credit, even if it's secure. All right, Lynette Tolo, what is considered a good credit score for a startup business? That is a good question. So when it comes to business credit, it's really like in ranges of like 1 to 5, right? And so, typically you want to be, I wouldn't focus as much on your score in the beginning, and I would focus more on your credit worthiness as it relates to your report, right? So I would focus more on your history, like how many on-time payments do I have? How many vendor relationships do I have that are in good standing? I would focus on that. And ultimately, that's going to help establish your score in the beginning, because most lenders know when you're starting out, you're not going to have a robust score. But what you can have is great history. So I would focus on that. Carolyn Powell, I have a service-based business. I don't have many expenses besides research and advertising. Is getting a loan for those services worth it? And is it harder than not having a product-based business, right? So here's the thing. At the end of the day, like I mentioned when we talked about Shopify and PayPal, right? They're going to give you a loan based upon your credit worthiness, based upon your profit and loss statement. And it just sounds like you have a really lean business, right? So if you're making great money and you don't have a lot of expenses, that doesn't necessarily mean that there's not a reason to get business credit. It might mean that, hey, I'm going to get this money to maybe amplify my reach and I want to grow more. It's not necessarily to cover expenses. So what you need the money for is kind of at your discretion. But as long as your business is showing strong revenue, you not having a ton of expenses isn't necessarily going to be a hindrance for you getting that credit. And is it worth it or not? Just is contingent upon why you want to use that money. Okay. Tiffany Peters, I have an LLC, EIN, emails, etc., but I did not trademark my logo yet. Should I do the trademark before applying for credit? No. Go ahead and apply for business credit now. Most of my businesses, I did not have, I'm ashamed to say now in retrospect, but I did not have things trademarked before I applied for business credit. Trademark is a form of protecting your assets, right? Protecting your business assets, whether it be your name, your logo, or whatever, right? Business credit is based upon your credit worthiness. They aren't mutually exclusive. Great question, though. Juanita Clark, how can you get a business address without investing in a real brick and mortar business, keeping your residential address separate? Great question. So there's offices like WeWork and Regis and a bunch of other ones that allow you to do something called a virtual office. And all that means is they're allowing you to say that you have an office address there. And oftentimes that means you can get mail that goes there as well. So look into that. It's much more cost effective than actually getting a physical location if you don't need it, but it makes you look more credit worthy by having it. So look into virtual offices. Daphne Sarcia. Are there certain lenders that are better for new small businesses that you can suggest for small business owners to check out? It's a great question. So the reality is, it really is going to vary based upon your industry. What I can say is that the internet has made it increasingly easier to be able to find the appropriate lender based upon your current business. So what I would encourage you to do is go to a site like Lending Tree or Cabbage, because that's going to filter the businesses that make the most sense for you based upon the information that you enter, right? So that way you don't have to try to wonder which ones make the most sense. They're going to tell you which ones make the most sense for your business based upon the criteria that you provide. Eric King, do you generally recommend using paid professional business credit building services? What I would say is, in the beginning, no. If you're, especially if you're starting out, right, you haven't probably jeopardized your business credit. You just don't have established business credit. So you can take this wonderful presentation that's pre-recorded and then go through the fundamental steps first, right? And then at some point, if it's like, man, maybe because of the speed at which I need to access this business credit is not happening fast enough, then maybe at that point, if there's a business claiming that they can expedite that journey and you vet that business out, then it could make sense. But I wouldn't recommend skipping that step until you've done all of the foundational steps, because you'd be surprised at how far you can get just by doing that. Christina Stevenson, can you have two different EINs if you have a separate business? Absolutely, you should. If they are separate businesses, they should have separate EINs. It's like two different people, right? Me and my wife are married, we live in the same house, but she has her social and I have my social. So great question. Gregory White, how do you get a business credit card versus a regular credit card? Great question. So with a regular credit card, as we probably know, you're getting that based upon your own credit worthiness, right? You'll go to a website, American Express, Chase, Bank, or whoever you bank with. They're going to ask you for some information. They're going to pull your social, and then that criteria is going to determine if you're approved or not. Right? For a business credit card, if you don't have any business credit yet, then what they're going to do, if you're okay with it, is they're going to leverage your personal credit. Right? If you do not want to do that, then you're going to have to go through the process of establishing your business credit first, like we talked about, and then maybe even go the route of using like a secured card to get started as a way to build your business credit. Bea Yancey, do you recommend a bank partner for business credit? I think that it can be helpful if you already have an established relationship, right? Because it goes back to being able to say, hey, Mr. or Mrs. Bank, as you can see, I have great standing history with you guys. And I know my business is just getting started out, but as you can see, I have a track record of doing the right things with my finances, right? So I think that can be a great first start, because most of us on this presentation and workshop probably already have some type of relationship with the bank. So it definitely couldn't hurt to try there first. Kevin Sauray, hopefully I'm getting these names right. Which business credit would you be the best suited for inventory, merch, and services videography? All right, so I'm assuming you're asking that question because number one, it sounds like you have inventory, and then number two, you also have a videography business. So it's not necessarily about what is the best, it's more about what the usage is. And those are two separate business models. So for the inventory, you're probably going to want a credit card that gives you the ability to kind of repay incrementally over time versus a charge card, probably. That's my assumption. I'm a big fan of like American Express Gold. Chase has some really good options to do that. Or if you wanted to, again, do a preset amount of inventory, it wouldn't hurt to actually get a business loan and just being able to purchase some of that inventory up front. But definitely a card that allows flexibility in how you repay. I would not necessarily advise a charge card per se. Tiffany Peters, I registered my business in Florida. It is a spice business, but I live in New York. One bank denied my checking account because the state they need to inspect the physical business space. I rent commercial kitchen to mix my spices, so I do not have a physical space. Any alternative? That is a phenomenal question. I don't necessarily have a specific answer for that because I haven't personally seen a scenario where you have had your business registered in another state and then you also had to be inspected in that state for the physical location. Um, yeah, I'm not sure. What I would do is I would, like I said, go to Cabbage or Lending Tree, and I would also try to do some preliminary due diligence about having the specific business that you have. And then once you enter that criteria, hopefully it will narrow down some search results for lenders that will entertain that type of arrangement. Carolyn Smith, do creditors request capability statements or business resume? There might be some. It's not a universal principle, but there might be some. All lenders across the board expect different things, and it goes back to doing that preliminary due diligence. If that's something you don't have or don't want to provide, then it's like, okay, what lenders can I go to that don't require that, and then narrowing my focus to those lenders. Okay. Leonardo Martinez, how can I increase my business credit to become attractive to mortgage companies? I am interested in purchasing real estate through my business. That is a really good question, also. I think credit worthiness, by and large, is credit worthiness, right? So if you go through those steps of establishing the fundamentals, right? I think that is a great first step. Now, again, one of the things you have the benefit of in real estate is maybe consider leveraging your existing property, right, as your initial credibility, right? So maybe buying your own residence as initial credibility, and then at some point, if you can justify that you are leveraging it for business purposes, even transferring ownership of that property to the business, which now can accelerate the fact that you are credit worthy in that space because your business owns a real estate asset. So that's one way to look at it. Sharif Hankins, how do you actually get your business score? Yeah, so go to nav.com, right, and create a profile. And then what you also want to do is make sure you establish a profile with Dun& Bradstreet, Experian, and Equifax for business. And then when you log into your Nav account, you'll be able to see all your information in one place. Brittany Connors, what are books, podcasts, or resources to help us speak the language of business and money? Thank you so much. No, thank you for that question. Now, this doesn't seem like a shameless plug, but I do have a podcast called The Uncensored Show, and we cover all things finance and entrepreneurship and a little bit of mindset. I'm also a really big fan of the Earn Your Leisure podcast as well. I think they have a phenomenal guest and a library of resources and content. So those are just a couple that I think will be a great starting point. And then once you select either one of those, it's probably going to provide some suggestions on some other ones. Also, a Social Proof podcast as well. All right, guys, that concludes our workshop for today. Thank you so much for checking this out. I hope that it was helpful. Please remember to check out all of the past workshops that are going to be loaded on the T-Mobile website /Magenta Edge. And I hope this was helpful and impactful. Thank you, guys.